Not sure if any of you have heard, but crypto, pretty hot right now. I am also pretty warm up here, if you can't tell, but trying not to admit that like I just did. We see in Washington a lot of pro-crypto policies, but despite a growing market cap, there's still a lot of questions about scalability and use cases. We have some great speakers now that are going to discuss this, both the opportunities and challenges ahead. We have Arjun Sethi, Co-Chief Executive Officer of Kraken, and Barry Silbert, Founder and CEO of Digital Currency Group. They'll be interviewed by Fortune's Jeff John Roberts.
Welcome to the crypto panel, everyone. As I often do, can I get a show of hands? Who here owns Bitcoin? Not bad. It's over 50%. I did this about 5 years ago, and there's one or two people, and everyone turned to look at them weirdly. But here we are. It's for several years, people would tell me not to write about Bitcoin because it's going to go away. But I'm sorry, you're stuck with us. I think it's here for good now. And I'm very pleased to have two of the OG companies who've been around since the beginning. Barry, I'm just going to turn to you quickly. You made some TV commercials about 6 or 7 years ago on the digital gold thing. And how did that turn out?
It's funny. I was just thinking about that. For those of you who have been in Bitcoin for a while, you will recall that people didn't really know how to describe what Bitcoin was for like the first 5 years. You would hear it's like it's digital money or it's blockchain or it's this or that. And I was running Grayscale, the asset manager at the time, and we said, you know what? Bitcoin is digital gold, and why don't we go pick a fight with the gold industry? And so we produced a series of commercials saying investors should drop gold and invest in Bitcoin. And it was so successful that the World Gold Council had to launch a counter campaign against our drop gold campaign.
Yeah, and the crazy thing is, what's Bitcoin's market cap now? Around 2 trillion?
Yeah.
And gold is what, 6 or so?
No, it's much higher now. It's like 10 or 15 trillion. Yeah,
you'll get them one day.
Bitcoin will catch up. It'll displace gold one day.
Yeah. And I always like hearing people's crypto origin stories. Arjun, what was your first time you touched crypto?
One of my developers for my first company gave me a desktop with Bitcoin that he had mined. This is in 2009, and then I threw it away. And so I think it was worth maybe 300, 400 million today.
Yeah, I know. I like those stories. It's probably less fun when it's happened to you, but you turned out okay. Anyways, well, guys, what's sort of a lot has happened right now. I think the big storylines in crypto right now are stable coins. You're sort of seeing the banks are adopting them. Amazon's dabbling with them. They're everywhere right now. And the one I'm really watching too, Stripe, I've always called a sleeping giant. They're launching a blockchain for sort of settlement, but just kind of makes sense. What is going on? What is the tipping point? Obviously, the regulatory climate as allows us now, but what has changed? So where's it all going? Sorry, that's a kind of a big question, but Barry, what's kind of going to happen next?
Does everybody know what a stablecoin is? Anybody? Yeah, generally, yeah. Okay, so I think there's very few very ambitious, innovative things that are happening in crypto, believe it or not. But I do believe that stablecoins are going to absolutely transform our financial system, our financial markets. And you've seen a lot of success with the initial kind of the two players, Tether and Circle. And there's a number of banks and companies that are looking at the success that Tether and Circle have had and say, hey, we went in on that action. And I think that there are going to be a number of competitive stablecoin projects, protocols launched over the next 5 or 10 years. But ultimately, I think there will probably only be a few winners. And it's very logical that a company like Stripe wants to get in on that.
Yeah. And the other big trend is something called tokenization, putting assets on a blockchain. This has gone on for years, but seems to be taking off. T-bills, equities, you can now sort of trade them on a blockchain. And I guess the fair question is why? They kind of trade pretty well already. Arjun, Kraken is now offering this. What exactly is it, and why are you doing it?
Look, I think one thing that people forget about in crypto is like here in the United States, we have like a very US-centric point of view. But if you take a look at crypto all over the world and like why people are adopting it in the first place, is that it's an alternative to their traditional financial system, whatever that may be. And because that's happened across, Bitcoin, Ethereum, altcoins, meme coins, the list goes on, is that they're moving their assets to crypto collateral. And so you're getting global liquidity. Because of global liquidity, you're seeing stable coins kind of take off because it's another stable currency based on what they may get access to in third world countries or emerging markets. And then there's a set of aspirations the industry's had for the last 15 years where they talk about real world assets. And the first enumerations of that are what we're used to, which is equities, US equities. And US equities is kind of the what I'd call the 9th, 10th, or even 11th wonder of the world, which is like you're going after companies that are producing intrinsic value, discounted cash flow, and there's underlying value to it. And so how do you tokenize those assets and then allow people all over the world to be able to partake and participate in that system? And so that's why you're seeing innovation around that, and then there's different versions around how people are enabling it. And our version of it was, how do we stay as true as possible to what it means to have privacy, sovereignty, permissionless system, and innovation to be able to be built on top of that infrastructure? And that's what Xdocs was for us. So yes, we're a centralized exchange. We provide liquidity. We cater to a certain set of customers that leverage that infrastructure, but then we give that infrastructure to everybody that wants to use it.
Yeah, I think what most people don't appreciate is the way the financial markets work is you have publicly traded equities, corporate bonds, registered with the SEC, and then you have everything else. And the everything else, it dwarfs what is kind of publicly traded and registered with the SEC. And if you think about like venture capital and private company investing, the inability to get liquidity for 10 or 15 years in these investments is problematic. And in a world where crypto has kind of shown the way to enable entrepreneurs to be able to launch projects and investors to participate and get access to liquidity in a much shorter period of time, has kind of, I think, opened everybody's eyes to, well, it's actually kind of weird that in the financial markets, if you invest in a private piece of credit or a private stock, why do I have to wait 10 years for liquidity? And so what we're seeing right now is there's this attempt to kind of converge these two worlds into what I think will ultimately be a kind of a 24/7 global market of financial assets that are being traded, which is really good for capital formation, it's really good for investors, and it's going to, I think, with the help of stablecoins, really transform the way the markets work.
I think more importantly, on top of that, we're probably going to feed off each other because we've both been working on this for probably in some cases 20 plus years, is like there's just so many assets that are illiquid in the first place all over the world. Just forget the United States for a second. We talk about private and public disparity, but just think about the 5 trillion plus asset, value of assets that are just locked everywhere else in the world that don't have access to global markets. Once you start thinking about this convergence and how do you get access to this global liquidity, how do you get more people to partake and participate in these assets, things start changing very, very fast.
Yeah, no, I think the notion of making these assets universally available everywhere is intriguing, but we'll see. I'm going to go to the audience in a sec, but I should probably ask you guys a hard one before it gets too cozy up here. Are we in a bubble?
Yes, but I'll let him answer first.
Well, in the crypto asset class?
Yes.
No, because look, I think at the end of the day, kind of all roads lead back to central bank intervention in the financial system, and kind of all roads lead back to lower interest rates. All roads lead back to money printing. So in a world where you have the opportunity to invest in an asset class, Bitcoin specifically, but there's some others that we're excited about, where there's a capped finite supply. You're priced against dollars. It's kind of the sky's the limit. Now, yes, there's a whole lot of crap in crypto right now, which is overvalued. I think 99% of crypto is absolutely going to zero, but that the asset class, the crypto asset class, is absolutely not in a bubble right now.
What about the Trump stocks or the Trump meme coins? How are they going to fare?
He wants to answer that question.
I'm happy to answer it. I think, look, people use the word bubble for like a category, and so are we in a bubble for fintech? No. We used to be. Are we in a bubble for B2B SaaS? No. We used to be. Are we in a bubble for crypto today? We may be in the overall, crypto exchange, DeFi, decentralized markets as well as centralized markets, but not in the public markets yet. Are we in a bubble for AI? Absolutely. So you kind of have to take a look at these in market cyclicality, or where is the supply and demand of these assets, and how do people value it? And so, I meet with investors all the time. I wear that same hat. And when I meet with any of my limited partners, they just have a checklist, which is, did this company have like 4 quarters of disclosures? Did they meet the AI threshold in the past? Did they meet a DEI threshold today? May or may not exist. And they have this checklist of 15 things. And if it hits that bar, they just hit check. They don't even know what the company does, right? And I think Circle is a good example of, hey, like just intrinsically, a lot of people are excited about crypto, so let's just invest in Circle. But to Barry's point, interest rates are going to denominate how that company performs in terms of its revenue. And so you have to think about, okay, discounted cash flow, what does it look like on year 2, year 5, et cetera. And to meme coins and other collateral assets, yeah, I mean, these things get overvalued, but there's usually some sort of intrinsic belief into something, and you could debate if you think it's valuable or not. So Dogecoin could be one. Meme coins and Solana could be the next one. Trump coin could be the other one. And so there was a belief around a certain movement, and can it surpass certain cyclical movements up and down is the question, are we in a bubble or not? If I look at the overall slope, over 15 years, I would say no. If you look at it quarter by quarter, the answer is yes, we get into those bubbles all the time.
Yeah, I mean, it's feeling pretty frothy to me, but I've also seen 4 of these cycles, and every time it crashes, the floor's like higher and the recovery's quicker. So, I mean, I think, yeah, no, it's going to be interesting how this shakes
There's
out.
always some framework. The framework I like to use is what's the PE ratio for, the S&P 500, and where are we above and below that with the rates that we have today? And like, we're kind of still at the average from, over the last 25 years.
Yeah. I've got some other questions, but anyone in the audience want to jump in? Please go ahead, introduce yourself, and please keep your question short and snappy.
You're not going to like this question, but so my name is Gillian Manis. I'm co-director of Europe's Innovation Fund, but I come from a different level. I've spent 30 years in intelligence community. I come out of that. We in intelligence and within defense worry very much about crypto. We see it being used by bad actors time and time again. It's something we all know it. I'd like to know when you will be able to discuss and really institute some guardrails, and is this part of the discussion, the roadmap going forward?
Do you mind if I take this?
Oh yeah, I mean, look, it's an interesting question, and I mentioned before, there's only a few things I'm excited about. I'm excited about the convergence of AI and crypto, and a project there, and I'm excited about privacy. In the conversations that I'm a part of, I think that there is certainly risk associated with the use of cryptocurrency, whether it's Bitcoin or a privacy-focused one. But I think generally speaking, I think the world is better off with privacy and financial privacy. And in the same way that a bad person may use a credit card or an iPhone device or cash to do bad things, I don't think that that's a reason to curtail the use of cryptocurrencies or privacy-focused cryptocurrencies like Zcash. So I'm actually on the opposite side of that. And it's funny, in the early days of Bitcoin, when we had conversations with people in the intelligence community, they actually said to us, please help Bitcoin grow in usage and adoption, because we get to trace the movement of the money around the blockchain. We would much rather see bad people use Bitcoin than use cash.
Yeah, my answer to that's a little bit more philosophical, is if you take a look at, and maybe I spent too much time in this ecosystem as well, is that 1999 to 2001 was probably pretty seminal. Obviously, in the United States, you had the September 11th occasion, and then you had the Patriot Act, and then you had the FISA courts. And since then, I would argue worldwide, no one gave a shit about privacy. People's sort of like sovereign rights in any capacity. And when I think about like what really matters to me, at least as an immigrant to the United States, was that I don't want to go back to like what my parents saw, my grandparents saw in the countries that they were in, where they were socialistic, centralized, everything is controlled, and you can't do anything without sort of asking for express permission. And I think the pendulum swings once in a while. And if you take a look at least at the premise of Bitcoin and why it started, it was, sort of it was a pushback to the global financial crisis, which is like we relied and we trusted on banks, which systemically, have been more and more at risk. Like if you think all the banks that I work with, I think they're more systemically at risk than we are as crypto companies because the way in which they are over leveraged and operate their businesses. So that's one, and then two, there's just much more fraud, much more shady, nefarious activities that the banks and the cash systems worldwide continue to act in than what crypto does on a day-to-day basis. Our system is transparent. Obviously, we care about permissionless systems and sovereignty, but we're able to give like the power of what it means to have your money in your pocket to you. And I think that's like the most fundamental, most important, like a right around why we build what we build on a daily basis.
Yeah, and I think a lot of the CEOs in our industry feel the same way, and we're all working really hard to make that a reality.
Yeah,
and I go back to why XDocs, why tokenized assets, tokenized stablecoins, et cetera, is that we're doing the same thing, which is like, if you own a share, you should own the share. The bank should not own it, the custodian should not own it, they shouldn't make money off of you, and it shouldn't be part of a walled garden, it should be yours. And if someone is going to make money off of it, akin to how we think about lending or staking, is that if we decide to figure out how to lend it to someone else, we should share that back with you, and that doesn't happen in today's traditional financial ecosystems.
Yeah, I mean, not to take a middle ground, but for years I've seen this. There's Spencer, your faction, crypto people are all kind of like scammy and like helping terrorists. But conversely, the crypto community is like, wow, the bank's the man, they're out to get us. But now you're all at the same table, like it or not. The reality is, people like these two are part of the mainstream financial ecosystem. And I think it's time for kind of understanding and dialogue and respect, not to be too mushy. But I think there's kind of legitimate concerns on both sides. And like it or not, you're all at the grown-ups table now, and this conversation is going to keep evolving. So I think, it's one to watch. I want to go quickly to AI, because it wouldn't be a tech conference without AI. One thing that really intrigued me is Brian Armstrong, the CEO of Coinbase, was telling me about the idea of having our sort of shopping and AI agents out there with little crypto purses. Kind of like this idea of they all can go shopping for you and stuff. Maybe it's a bit fanciful, but Barry, I know you actually have a new project, and you've put on you've kind of come out of semi-retirement to put on your CEO hat again for a new blockchain project. Can you tell us a bit about that and where AI fits into crypto, if anywhere?
Yeah, so I believe that the next big wave in crypto is going to be the convergence of AI and crypto. There's a bunch of projects that are doing interesting things. The one that has reached escape velocity is something that's called Bitensor. And so essentially what Bitensor is, it's an open source protocol just like Bitcoin, and it enables decentralized and permissionless AI. And think of it this way, in the way that the internet was the World Wide Web of information, Bitensor is creating the World Wide Web of intelligence. And it's this incredibly fast-growing, passionate community of AI engineers and machine learning experts and data scientists who are saying, you know what? I don't want the world that I live in to be dominated by 3, 4, 5 very large tech incumbents. I want to open up the development and the access to AI, and Bitensor is enabling that. It is the thing that I've gotten most excited about since Bitcoin, when I got involved in Bitcoin in 2012. And as you mentioned, I decided to start a new company to do with Bitensor what I did with Bitcoin and help educate and make it useful and accessible.
Yeah, when I hear AI and crypto in the same sentence, I admit my buzzword kind of, alarm bells go off, but also don't sleep on...
Rightfully so, because a lot of
Yeah.
it is just waving hands.
But also, don't sleep on Barry. You're still got your stockbroker's license at 17, right? And you started Second Market, which was trading in private shares before it was cool. So, I think Barry deserves a little more latitude than most when those buzzwords come together. So, Arjun, what do you think about the AI issue?
One, we're supportive of what he's doing because we're, I guess, technically investors into DCG. Look, I think it's really easy to just use buzzwords, right? Like crypto, what does it really mean? It meant something different today. It means something different today than 10 years ago, than 20 years ago, and even post-World War II in terms of cryptography. And AI, same thing. It's been around, right? Machine learning, AI, and different versions of how you think about taking data sets and doing something with it, thinking on top of it, and then building inference on it today. And so, look, I think what's really, again, exciting when people talk about what is the convergence of AI and crypto is, what's the basics of crypto is putting the power into the hands back into the open source community, people being incentivized to be able to create and then get rewarded for it.
And do it in a permissionless way.
Exactly, anywhere in the world. And that they can also participate and compete against Google, OpenAI, XAI, and whoever that is more on the centralized side. And I think there's a place in the world for both. And if you look at traditional software, and what had happened is that you had this unionization of open source pushing back against centralized software companies. I think what's great about crypto and these AI open source software companies is that you've got now that same union pushing back, but they're incentivized and they get compensated. And that didn't happen before, and they're able to figure out how to, as a community, get away from innovator's dilemma. Because if Barry's project doesn't work, there's someone there to say, I'm going to fork it, I'm going to try it again and try to do it better. And it may or may not work, but it's like the next iteration happens on a week-to-week basis.
But just to clarify, not my project, but Tensor is just like Bitcoin. It was a white paper that came into existence, and the community organically forms.
Okay. Well, if you can't get enough of this stuff, at the Empire Lodge reception, where we'll all be at 6:30 tonight, we're having a little crypto corner with Barry, and you can put your questions to him. And if you're just interested in finance, fintech, crypto, come on down and debate with us. And finally, we are out of time, but let's go back to basics. Bitcoin is around 110,000 right now. This time next year, what will the price of Bitcoin be?
I think you're perpetuating the bubble.
Oh, okay. So what's the price of Bitcoin going to be this time next year?
I would never, ever make Bitcoin price predictions, but I would say I'm incredibly bullish about this industry and this asset class, and it's a fun place to be.
You give a price?
I think, well, look, we run an exchange, and we're always going to be supportive of inflows and outflows, so it's going to be based on supply and demand.
Okay, I miss the old days of crypto where they'd say $1 million. You guys have all gotten cautious and grown up now, but please give a big hand to our panel.